time for the big three. 3 stocks, 3 charts, 3 trades. And Rick Ducat will take us through the charts. Here to take us through the trades, Kenny Polcari, Senior Market Strategist at Slate Stone Wealth. Good to see you both. Kenny, how are you feeling about the market? Is there going to be that Santa Claus rally? Because right now we're not seeing anything like that.
I got to tell you, I'm not so sure. I think Santa Claus already came. I don't think there's going to be this year-end push into the end. I think there's going to be remain volatile. I don't think it's going to crash. But I don't think we're going to new heights at all. I think we're going to turn right in here. I think the best of it has already happened, but that's me. And look at what's happening today. Once again, we saw great action on Friday. Suddenly, the market just loved everything it heard, and then today it's giving a lot of that back, which I think just speaks to kind of the overall nervousness as we move into the new year. Not anything that anyone should be super concerned about, but enough that it's going to cause people not to feel like they're getting FOMOized, right? That they're going to miss out, because you're not going to miss out.
So at this point now, you're looking at a name that has had a pullback, and that is Caterpillar. Why did this one interest you for the big three today?
So actually, everything we're looking at today is on sale, right? All 3 names have really pulled back. But let's talk about Caterpillar. First of all, because it's in the industrial space, right? I like the industrial space. I think on weakness you need to add. Caterpillar is one of the biggest names in that group. We see it's down about 14% off the November high, taking us right back to 200-day moving average trend line support, which at the moment it seems to be holding. Now, here's my deal. I think it's going to hold there, and then I think it's going to kind of churn and start to do better. If it fails to hold there, then I think there's a real possibility that it's going to test the September lows down around 328. Although that's not, unless we get a complete meltdown in the market, I don't suspect that's going to happen. Look, it also pays you about 1.5% on the divvy. Not tremendous, but they grow that divvy 7% a year. And like I said, it's one of the biggest names in the sector, and it's on sale. So I like it.
Okay, so it feels like it's on sale. Let's see what the chart tells Rick Ducat. Rick?
Yeah, Caterpillar had a big bounce after the presidential election. You can see that we had this nice rally to the upside here that propelled us into those highs near 418. Kind of come back down to earth, though, since then. We weren't really able to hold on to those elevated levels here. And we have retreated to what looks like an important area to me. We've got our green line right here, which is the kind of the close that we had before our gap up near 356. And then this red line, a repeated stopping point for price, kind of a repeated boundary that we saw over and over again near about 365. So now we're between 356 and 355. This seems like a key tipping point type of zone that we're within right now. Yesterday, we had a piercing line type of candle pattern here where we had a gap downward and then a large green candle that took out more than half of the previous day's red candle and closed above that area. So probably a more bullish sign, not really getting the follow through that the bulls would have wanted today, though. Sticking within the boundaries of this white sloping downward trend line after breaking out to the downside below this triangular blue trend line configuration that we had there. Faster 21-day EMA starting to cross below slower orange 63-day EMA here. RSI has deteriorated as well, but now we are out of the oversold area, and we're also invalidating that red trend line there. I think it's also notable we didn't really test that the high points that we saw here are green line, so perhaps we could be due for a bit of a bounce right now. We can see as well, volume profile shows this is a key trading area near 390. Not really a ton of other notable volume, kind of except where we are right now near 360, the point of control all the way down here near 330. So we also have an area to watch now. Our linear regression line, our line of best fit, lines up very closely with our volume node. 390 seems like a potential resistance area. Then our +1 channel lines up with our old highs near about 320 or so. To the downside, look for a break below our green line, 356. That would also be our -1 standard deviation channel. Then all the way down here for further support, point of control, -2 channel, and old lows near about 330.
All right. What do you think, Kenny? How do you like that chart?
I think that's right. And I think those points of control, like I said, if we fail here at the long-term average, then that 330 level would be the next range. And I'd say, that's like the August and September lows where it tested and found support there. And it would make perfect sense. I'm just in the camp that I think it's going to hold here and then move and then start to trade higher again. But yes, I think that was great.
Right. It wasn't that long ago that Goldman Sachs put a 442 target and a buy rating. They did that on the 12th of December, so they certainly see some upside. And Truist sees a 471 with a buy rating. So those are some recent calls there on Caterpillar. Up next, we have Novo Nordisk. Let's talk about that name.
So this is just because of what happened last week. Look, they took this stock down on that news about that weight loss drug, that new weight loss drug that they're working on, that it only caused people to lose 22.7% of their weight versus 25%. And so therefore they crushed the stock. They took it down 20% on Friday. Now, it is in a downtrend. The whole pharmaceutical industry is in a downtrend. I get that. So the stock was already on sale. Now it's down 43%, or at least on Friday it was down 43%. To me, was a screaming signal that I think this is just a little bit overdone. And today, in fact, you're seeing a bounce. Now, it had bounced higher. It's pulling back because the market in general is weak today. But I think down here, this is strictly because they just absolutely crushed it, I think, on a headline that was an overreaction. So I would be looking for it to, make up the ground that it lost. Not going to do it in one day, but I think it's going to make it up versus going lower from here. I think the next move is higher.
Yeah, that gap down was sizable. Yeah. I mean, they went down to a low of $81 and change. Rick, take a look. I mean, you'll see that on the chart, folks. Big gap down.
Yeah, shares certainly took a hit here. And when we look at the price action leading up to that, Kenny's right, we were kind of in a downtrend for a while there. We hit our highs near 148.15, connected with these subsequent highs. You could see as well that that was about the point right here where we really started to take another leg lower. Once we broke through these old lows, that was kind of where things really started to go south. Now we can see that we are below our channel, and all we did was take our trend line going across the highs, duplicate it, put it across those lows. It can give you an idea of where to look for potential support. We went right through it this time, but what's interesting is that it looks like that's about where we topped out today. So the old support seems like it has being new resistance at this time right now here. So look to see if that holds true. RSI oversold 22, quite a low reading. RSI only goes from 0 to 100, so keep that in mind. That's a very depressed reading on the RSI, so momentum is much more geared toward the bearish side. Biggest volume of the year during that big decline the other day, so trading that came in like 10 times above the typical volume. Not really a lot of volume here at these low levels, though, relative to what we've seen throughout the year. Right here, 108 lines up with our -1 standard deviation channel. That seems like an important area to watch. We also have these old lows near 99 for another target to keep in mind there. Finally, -3 channel, our red line here, 83.44, very close to those 52-week lows, a downside area to keep in mind. And normally I try to take a zoomed in look. Here I thought maybe let's look at a 5-year weekly chart because we have no recent price action to go off of. Look back here. You can see we had this horizontal area lines up with a notable volume node here. So the area near where we are now also is pretty close to our -1 standard deviation channel. So if you're looking for a bounce, this seems like one area where that could start to materialize based on our technical studies, Nicole.
Right. Yeah, and look, the technical studies show the sell-off, and really this time of year is supposed to be a winning time, not these big gap of sell-off times. I mean, this back half of December is traditionally a good time for the market, particularly on a presidential year. But look, sold off, so you see the opportunity. Kenny?
Which is why I exactly think that it's overdone, right? Listen, Novo Nordisk is one of the biggest European names in the pharmaceutical industry, right? And so therefore, I think it's a time of year, there's less people at their desks, the moves can be more exaggerated. I think the news on Friday that they missed on this weight loss drug by a small percentage in terms of weight loss was just overdone. So I think this breakdown provides an opportunity for a long-term investor, and even if you're a trader. Now, look, again, the market's weak today, so the stock is still up, but it's off its high. But I think you kind of have to give it a couple of days.
All right. Now, what do we got to give to Verizon? It hit a high of 45 back in the early fall, and look, it's been chopping around. Tried to give it a go and sold off again. Is there opportunity here, Ken?
So look, Verizon, it's boring. Trust me, there's nothing sexy about Verizon, right? But it is a stable name. It's been trading in a very tight, 39 to 45 trading range. If you're going back and look at it, it's it's a communications company that's paying you nearly a 7% divvy. That they're growing at 2% a year. It's come right down in its testing support that you see back. If you look all the way back to July, May, kind of churned in this area where I suspect it's going to churn once again and then bounce between this 39 where it is now and this 45 range where I continue to expect it. And I think as a long-term investor, it's a core name. For instance, in my portfolio, in a lot of portfolios, down 12% is certainly a place where you could add some.
Look, and people like the dividend. I mean, Verizon was always a favorite because it was boring and it was like a go-to, Rick,
exactly.
Your thoughts?
Boring, I kind of ask the question, do you want to make money or do you want excitement? I mean, that's my thought, I guess, about that. But we can see here that 30 to 40 is a pretty important area based on our chart because it's a low point here. It was a point where price struggled to get above. It also matches up with our longer-term blue trend line. So we've got this area of lows with a longer-term trend line coming in right about the same area. But if we were to look even lower, there's also a pretty significant point at our light green line here, a double bottom type of price action near 38.70 or so. RSI oversold right now, not really getting much worse though at this point as we start to slow down a bit near this supportive area here. Price exhibited an M-type shape where we hit our high point, retreated back quite notably here almost to that area in question near 39.40 and made this a subsequent rally that didn't really make it up to those previous highs. So that was not a great sign. That was something to kind of be aware of as it was happening here. And 43 was another key level, this red line here. That's where around where we topped out a few times here and then bottomed out over here as well and then topped out here again. So even though we did cross above and below it, it's still one of these areas that really sticks out from a price perspective here. Also, consider this, adding to the supportive thesis that we're kind of discussing right now near 39.40. We've got our point of control, the area of heaviest trading by far on our chart. This is where all the big volume is, right about where we are now. We're also quite close to our -2 standard deviation channel. That would be a relatively extreme move that could be a supportive area to watch here as we continue to digest. So this could be another situation where if you're looking for a bottom based on what we're seeing, this could be a candidate for thinking about.
Yeah. All right. We'll give you thank you for all those charts there, Rick Ducat. Kenny, we'll give you the final thought because 83% of the time in December on a presidential election year, December is typically extremely strong and has an up arrow. So let's hear the final thought.
Well, so I think you got a lot of conflicting headlines happening, right? While I agree and I am bullish on what the market's going to do going forward under the Trump presidency once he gets in there, there's a lot of conflicting stuff, right? You had the Fed last week. You got conflicting data coming out of different Fed heads. We're cutting more. We're not cutting more. We're going to go slow. We're going to go fast. And then you got Trump with less regulation, which will certainly be bullish, right? Very supportive of business. So I think you've got this environment right now where the confusion creates angst, and when you get angst, and the market tends to kind of turn lower, which is nothing to be concerned about as a long-term investor. I'd actually like to see it come in a little bit because I got money to put to work that I've been kind of patiently waiting.
All right, great to see you both, the big three. We saw Caterpillar, Novo Nordisk, and Verizon today. We had Rick Ducat there on the charts and Kenny Polcari, Slate Stone Wealth. Thank you both very much.